What's going on, future me? Hope all is well. I just want to, of course, as with every week, go into my pre-market plan, things that I've made observations on, things that I feel will be important for my overall trading plan going into this week. Just to jump straight into it, as you guys can see, we have the monthly for the dollar pulled up. As you guys know, right, I outlined in my last pre-market plan that there were a lot of news events, a lot of catalysts for a potential move into 103. And of course, I mean, it's only the beginning of the month as far as the candle formation is concerned, but we are making that move into 103. We're fairly close. With that, I've said this many times on here. I feel that 103 is programmed in many ways, whether it be a candle formation, a wick, whatever it might be. We're going to 103, and in my eyes, that makes a great case for gold loans, at least in the short term. Of course, I want to keep this as technical as possible, rather than bringing all these fundamental narratives and all this other stuff into play. But especially with this last sort of NFP and sort of wage growth news sort of dropping, the market tanked short term, and I mean overall, I guess from my perspective, my understanding, and again, I want to keep it technical, so of course, feel free to do your own research, look into things on your own, go down the rabbit hole and everything else. Overall market sentiment, right? Wages have continued to grow. Rather, they haven't started to fall on the other side of that, right? As well, workforce in the U.S. has been fairly strong, with NFP numbers coming in above forecast once again, as I mentioned in the last week's pre-market plan. With that in mind, right, that is generally not an indicator that inflation is really slowing down. So overall, from my understanding, the market sentiment is that this coming December, 75 basis points is on the table, much more so on the table than it was in previous weeks, for the Fed to raise rates. So with that in mind, right, like this is one of those things where, again, I mentioned the move into 103 on a short term basis. A hike is a hike at the end of the day. We've generally seen rallies, at least small moves, if not much bigger moves to the upside on these different rate hikes. So definitely something to keep in mind. Again, do your own research, look into these economic sort of press releases on your own. Everyone has their own sort of spin on it, their own narrative as well. So overall, just want to keep it technical. Again, 103 programmed. This is the monthly. We'll go into the weekly now. Of course, just before I jump into it, this is a bounce or break level for me as well, this 103 sort of area. Other than that, it would be a range reclaim below this level. And that's where things start getting really crazy, right? Like we start looking at 98, we start looking at 93 eventually as levels that we could potentially find a floor at. When you look at the weekly, right, this is something I outlined last week as well. This last 2 weeks candle, this long way to the upside, clearly rejecting a potential bounce. We've now broken this sort of base here that we formed these last 2 weeks, and we're again moving straight into 103. So definitely strengthens my conviction for gold longs. Again, at least short term, prior to the December rate hikes. Especially I believe they're right around the corner as well, a couple of weeks. So definitely gonna have to see. I definitely feel that we can make that move into 103 prior to. So I'll be taking advantage of that in my gold plays. Daily, same sort of deal, right? We did. I did say last week, in order for us to stay bearish, we'll need to break, retest, or break with momentum below this level. Looks like we're doing just that. We're forming, last week's candle, or rather last Friday's candle, formed a long way to the upside, solid bodied, below this sort of level of support, this SR zone, liquidity zone, whatever you want to call it. We're making a move down, right? I have a floor here set at 101. But there are still, there's sort of range midpoints that we could stop up at. But as it seems at the moment, there is a fair amount of steam on this, especially when you look at these wicks, strong moves to the downside and everything else. So we'll just have to see how it plays out. As long as we're playing, of course, below this level, we're not getting any sort of clean reclaims above that 105 sort of 50 area. Gold loans are looking incredible. Of course I'll get into that. I did make a pretty big obviously I reviewed all my trades this week. I took about 4, one of which I will be highlighting on gold. Just something I need to improve on and everything else. But outside of that, I hope that made sense as far as the dollar is concerned. Once again, we have kind of come into this level of liquidity, our bounce or break sort of level, and we are now breaking below that. So with that, of course, using this in confluence with, the pairs that I trade, gold in particular, I will, obviously be biased towards buys on gold, retest, and buys on levels of structure when it comes to gold. Going into JPYBasket, and I feel like this is interesting, right? Because we look at GBP and the yen, they've strengthened relative to the dollar, right? So as I mentioned in last week's pre-market plan, an interesting move or something I would have entertained was this move in, from 77.50, 77 sort of 60 area into 8,000. And that's exactly what we've done. We closed a little bit of weakness on Friday into 8,000. So of course, I'd like to see how we react this coming week at that level. As I mentioned as well, right, we have on the weekly this weekly range mid as well, also in confluence with the 618. So, we came into this level with a ton of momentum. Now we're at a pretty pivotal point to see how we react to the 618 and that level as well, because as I said, multiple times, we can, go into a level, play into a level with all the momentum in the world. But when it's time to actually close above it, that's when things start to get sort of sticky. So I'll be keeping an eye on that. Of course, with JPY and GBP strength at the same time, it is a little bit tricky to to get a grasp on where I want to position myself on the GJ chart. And of course, that's something I'll get into as I break that chart down. But again, we are at a pivotal level of resistance for the yen. I would expect a small knockback from this level if we can, of course, close with strength above this range mid into the range high, that 8,000 sort of level. So if we start to see the yen starting to basically drop off here with the current GBP strength, of course, that makes a great case for GJ longs. After we saw the breakdown on GJ this last week, though, who knows, right? Who knows? It really depends, and that kind of leads me into. We can take a look at the monthly here as well. It looks like a small reclaim of these sort of levels of microstructure. But that leads me straight into the British pound, right? Like, look at the strength on this reclaim here, right? Open of the month pretty strong. I don't think there's any bottom wick on this particular candle though. So this could be upper wick creation, right? This could be something to take a look at as we go through these next coming sort of weeks, months, and everything else. No bottom wick. If we can maintain this strength above this level of liquidity, this sort of SR zone here at 121, sort of 30 area, awesome. But the fact that we don't have a wick on this candle, or rather a downside wick on this candle, leads me to believe that there's a potential that this sort of beginning month upper wick creation is something that could sort of play out into the downside. And when you look at it from the perspective of the yen strength that we're seeing, right? If we continue to see yen strength and the pound kind of falls off a cliff here, it would make a great case for GJ shorts, which is what I've been biased toward, especially since last week, with the range breaks and everything else. Of course, like I said, I'll get into that. But just something to take into consideration. We look at the weekly though, right? Very clean reclaim as I outlined last week. We're playing right into that 618 though at that level at around 126, and we'll get into it on daily levels as well. So we definitely have a couple of different levels to test and see a reaction on, prior to confirming this level of strength on the pound. I would love to see again how it reacts into that 126 levels, whether it gets knocked back for a retest of this 120, 121 sort of area, and then higher, or if we just tumble lower than that. Daily looks really good as well, right? Like, clear uptrend, breaking out of this channel here, breaking above this range, retested it higher. In many ways, you could say that 126 is in our cards, very high probability sort of setup. We had the end of the week sort of close with this long way to the downside, and gives you sort of all of the the makings, right, of a move into that 126 area, also in confluence with that weekly 618. So that's what I would be expecting. I want to see again a reaction to that level prior to making any determinations on whether or not the GBP strength is here to stay, so to speak. So I hope that makes sense. I hope that's pretty straightforward. I don't want to go too in depth on the indexes. It's more, you can see the chart tells you exactly what you need to see, right? Like, GBP strength, awesome. GJ buys, yen weakness, GJ buys as well, and so on. But we're at the moment seeing again yen strength and GBP strength again, which can make it a little bit tricky to navigate. I would like to see which one of these currencies fall off first to really position myself on either side. So with that said, we'll go straight into GJ. Let's see here. Let's go to the weekly. Something that we can take into consideration and look at on the monthly as well, right? We had this monthly cup and handle playing out. Measured move was playing out, perfectly during the month of October. November was a little bit of a shaky month as well. We closed right below this level of structure at 167.85, and as I've mentioned many times, as long as we're playing above this level here at 161.50 sort of area, the cup and handle is still sort of valid, right? We can continue to consolidate and play within this sort of range between 160-150 and that 167 sort of 80, 168 sort of area, excuse me, before we make that move into the 170s, 180s and everything else. The only thing that would make me kind of hesitant or would make me feel differently about that sort of sentiment would be clean breaks below 160-140 and eventually range reclaims below that. But we have not seen that just yet, so I can't necessarily invalidate the cup and handle at the moment, right? When we go into the weekly, this is very similar to what I mentioned last week on my pre-market plan with the 4-hour trend line, but we're seeing it now on the weekly, right? Weekly trend line here, super respected, has not necessarily been broken outside of crazy news events like right here. I believe this was like Japan intervention type of thing, so it went nuts. But we have not seen a clear sign of disrespect on this trend line, right? And we're playing around right at this weekly range high, this level of liquidity, the June high, all these, 100 different confluences that would make this a very strong level of resistance. With that in mind, you have to think to yourself, are we gonna break this? Like, is it a little too early? Are we gonna break this? We're sort of squeezing, right? We're squeezing inside of this trend line. Are we just gonna, get a crazy rollover? Like, what's going on, right? Because every time we come into this range high, we might get a, right here, we get a strong close. We might get a close above this level of resistance, above these wicks and everything else. But are we staying above that level? Are we, printing above this level with strength, retesting it and going higher? We are not. So that just makes me think like, maybe, maybe we see a crack lower soon if we can't get a clean break above the June high. And this makes much more sense on lower time frames as well, because you can see the clear, rejection of these range highs time and time again. That, overall just make you think, I'd rather just be shorting the range high than to wait for a break and retest or wait for a weekly close with strength above it, because we're never maintaining our heads above that sort of water. Not only that, again, we are squeezing this sort of trend line. So these are excuse me, these are all things that are leading me to believe that we're going to have further downside soon, outside of what we've seen in the indexes, outside of all the, all these different observations, just purely from a technical standpoint. We are, again, we're at a very pivotal point on the chart, and we have been for some time now. We've been playing around those weekly range high for a minute. So it really, of course, I'll break down the different levels on lower time frames that I need to see and everything else. But, it's really, we really need to, I guess, buckle up for the ride and see how everything plays out. Looking at the daily as well, a couple different observations here as well. I did mention last week that we could be putting together like potentially a lower high and lower sort of structure, especially after these range high rejections. As you can see right here, right, we have this head and shoulders, break lower, it rebounds back into the range high, clear rejection. You could also kind of qualify this as a lower high as well, right? Solid bodies up here, didn't close, only printed wicks in that area, right? Where it starts to get a little bit sticky is when we get into these levels of structure down here. We have this sort of range mid, this sort of little level of microstructure here at 164 sort of 20 area. That price tried to bounce from. This is an equal low as well here, so we could run this going into this next sort of week. But overall, when I look at it from my perspective, right, we have multiple levels of structure on the chart. We're looking at it right here. We have this sort of this level here at 165, 166 sort of area. We have the June high, the weekly range high here as well, around 168. And then we have this level, the previous daily range mid, very strong level of support here at 162, like 161 sort of 50 area. With this in mind, right, the fact that we're printing below this level of structure at 165.80 is bearish to me. Unless we could reclaim that range and play into the June high, which I feel personally is unlikely, I will remain bearish and looking for sells. This looks like a potential reversal lower at the moment. The only thing that could really get me bullish at this, at this particular moment is a clean break and retest above that range high, right? Like I am not trying to buy unless we get a clean break and retest above that level, because otherwise, right, we're just going to get stopped up at that range high anyways and just reverse back down. Because that's what's been happening week after week and month after month. So just overall, just taking that observation and running with it, I'll remain bearish below overall the daily and weekly range high, especially when we look at it from the perspective of more near term. We're below this level of structure here as well, like 165.80 area, 165.50 sort of area. And then, of course, on the 4 hour, becomes extremely clear. Excuse me. And this was last week, right? This is something that I outlined in my pre-market plan last week. Very similar, right? Never disrespected this trend line on the 4 hour. Eventually rolled over with strength. Literally, my entire plan, I don't trade on Sundays. My entire plan played out on Sunday into Monday. Like, literally, hundreds of pips move that, I didn't catch just because I don't trade on Sundays, which it's fine. There are plenty of retests and everything else in the market, but I just want to outline that, like, absolutely nuts. When you look at this 4 hour trend line, right, what does this look like? I was just outlining this. Look at the weekly. Exact same sort of structure. It looks like we're, copy and pasting, these sort of charts out of a book type of thing. So overall, we did get that rollover from the June high, clear rejection, double top here as well. Bounce or break level, we just bounced from it. Broke that channel here, that trend line to the downside, broke the range mid as well, and we ended up bouncing around 164. So what I'm looking for now is a retest of this level of structure here at 166 before a move lower into 164 and potentially lower than that. It's going to get extremely, if you look to the left, right, there's no sort of traffic, no crazy price action for a very long time beneath 164. If we break 164 with strength, we're going for a ride. Like we're going for, let me be the first to say we're going very, very much lower with that in mind, right? Because again, no real traffic when we look to the left. So again, how I'll be wanting to play this is level to level as always. We have a very sort of small level of microstructure here, this sort of range mid between this range high and 164 range low. What I would like to see is further downside, of course. We have this small sort of channel. You could also call this sort of a wedge. Right, very early in the wedge though, right? So I still feel that we need a retest of 164 before the 618, something that I'm open to playing as well. But my overall sentiment is the same. I will be looking for sells in either case, whether it be a rejection of this the top of this channel into 164 or a retest of the overall 4 hour range mid and 618 at 166. I hope that makes sense. I'm trying to make it as clear as possible. Of course, these arrows outline basically my overall plan. Literally just playing these levels level to level. The only sort of I guess caveat is that I will not be taking buys regardless of whatever rally we see inside of these ranges, right? Unless we get again a breaking retest above this June high up here, this level of structure, I will not be taking buys, right? Because you think about it, right? You look left. Once we get a break and retest, if we get a break and retest above this June high, we are going to fly. Same sort of observation below 164, right? You look left, there's no traffic. You look up here, there's no real traffic. If we get strength above or below that level, we are going again for a ride. So going straight into the 1 hour. Excuse me. Let's move this around here. And there are two positions I took on GJ just before I get into the 1 hour, right? There were two sells, right? I wanted to get a sell of the break of the last week candle lows here. And then when I noticed that we were basically ranging within these levels, I was like, you know what? I'm not going to trade this choppy range. I'll trade a break below the last week candle lows or the previous week candle lows and overall that range low area. So that's exactly what I did, right? I entered a little bit early here, got caught within this chop, within this range, recentered, and I was like, all right, awesome. It's a small loss, no crazy no crazy like changes to I guess my overall account or P&L at that point. Eventually got into sells here. I think that this is a very good sell. I feel like this set up perfectly. I would take this setup 10 out of 10 times, right? Because we look at it right here. It didn't work right here. It was a little bit early, especially because we found support here, long went to the downside, and eventually rallied for liquidity before I moved lower. But then you look right? The same exact move, same exact breakup structure. You get in. There was a small retest here as well. Move lower, it went straight into my target. So of course, the market is going to do what the market wants to do. I could have exited this position early, but this whole thing about active management and everything else, I typically do not active manage my trades, as I mentioned last week. So it is what it is. I got in on a buy limit, or excuse me, a sell limit on I don't know if it was this candle or this candle. So I got in here. Overall, stop loss above this level, this sort of zone. I felt that it was a good trade. I still feel that it was a good trade. I just think that one of two things, right? Either I could have taken profit after I seen this crazy candle, this crazy way to the downside, or I could have been a little bit more patient for a much more clean retest, I would say, right? Because the way that I trade, especially with when you think about the nuance of these different candles, like discretionary trading as a whole, this was the rejection for me, right? Like with these failures to close back above the range, this range low that we just broke, failures to close above that were the retest for me. So got in here. I don't think it was necessarily a bad trade, right? Like I don't think it was a bad trade again, because I would have taken it 10 out of 10 times, especially when we look right. I would have taken the same exact setup and it would have played out, to my target. I just, sometimes the market does what the market wants to do. It is what it is. Like, what can you do, right? You can't control everything, unfortunately. So with that, chalked it up. I mean, -2R, nothing super crazy. What happened here? I believe this happened at 3 a.m. Yeah, this happened. I was fast asleep during this price action. Otherwise, I would have entered once more. But going straight into it, outside of the reviewing of the trades, going straight into what my plan is for the week, I'm still of the same sentiment, right? There are two sort of levels I would be willing to take sells from at the moment on a 1 hour sort of time frame perspective. The first is where we broke out of these last week candle lows here around 165.50, 165 sort of 40 area. And outside of that, a level above that I would be looking to take sells at is that 166 area. That's actually the last 2 weeks candle low in confluence with this 618 swing high to swing low. We could also make a case for a much more local fib as well. We can say this swing high to this swing low is in confluence with the 618 and these sort of range lows as well. So again, reason being, I will be looking for sells at both of those levels. I hope that makes sense. Again, Arrow sort of outlined that. I'll be playing these different levels, as always, level to level. Once again, I will not be taking buys at any point within this sort of range unless there is a break with strength above the June high. Otherwise, I'll be looking for sells at these different levels. And of course, I just want to point this out, we have a very strong level of support here at 164. If we break this level of support, again, as I mentioned on the 4 hour, we are in for a ride, right? Look at, again, no traffic when we look left under 164. So I hope that made sense. Overall, that's my plan for GJ. Let's go ahead and get into gold. All right. So we saw, we saw an insane amount of strength on gold, especially with dollar weakness. I'm hoping to see more dollar weakness with that move into 103 so we can continue to take gold buys. When you look at this weekly, right, beautiful. And when this is a fib from the swing high to the swing low. A full retrace of this move would bring us straight into sort of 1900 area, but much more sort of near term than that. We are seeing a move into this range mid resistance at 1812 sort of area, 1810 sort of area. As you can see, there's a lot of chop within this range. We did reclaim this range low here at 1760, 1756 sort of area, which is great, extremely bullish for me. But when we get into ranges like this where we have a ton of chop, lots of wicks and things of that sort, very likely that we have the potential to eventually stop up at this level and, you know, even come back and retest 1756 before a move higher. I would love to see a close with strength and a retest above this level though to continue buying. And I'll get into it on lower time frames as well. But when we look at it again from the weekly perspective, we do have an obstacle in our path when it comes to continuing to see gold strength. But as long as we see dollar weakness, everything should be good to go. Going into the daily, look at this daily candle we closed off on. Like, one thing I will say, as great as this candle looks, right? Long way to the downside. Unfortunately, we didn't get like a solid body engulfing to the upside. But again, that long way to the downside is enough for me to say that retest of 1780, 1770 area are valid. And this is a valid level of structure. Another observation I also made was this sort of range mid within this range high at 1820 area and the 1780 area as well at 1805, 1806 sort of level, right? We stopped up at this level once before. Who's to say we don't stop up at this level once again? So something I'm going to be looking at for sure. I still, overall, as far as I'm concerned, I will still be looking at buys on strength of this level around the 1780s as well, just because, again, you look at it from multiple perspectives. We have this long way to the downside. We are just coming off of a ton of strength the last sort of days prior, and we also have this level of sort of microstructure here at 1780, 1781, printing above these candles, basically retesting above this level of structure. These sort of candles here, I can even, you know, place a little line here, make it, you know, look at that retest. So we have that microstructure there as well. And typically when you see long stretches like this, right, like it's very typical to see, you know, something like this, boom, boom. Now we get another sort of long leg up, the retest back on 1780 before moving higher, and then eventually topping out and reversing. So again, still overall of the sentiment that we're going to be seeing more buys on gold. I am biased towards buys this particular week. And when we look at it in the 4 hour, it becomes extremely clear. Like, it always becomes extremely clear on the 4 hour and the 1 hour. With that, we're moving within a range, right? And this is just my view of the market. I like to play ranges, even if we're trending, there's always a range to be found, and we see that here. We have the November 22 high and this level at 1782 that we are printing above. Of course, as I mentioned in my previous pre-market plan, I am looking for buys above 1756 all day, all day. I saw this inverse head and shoulders. I saw this candle with strength. I actually got in on this play, and I'll cover on the 1 hour. I made I made a very big mistake, one that I have reviewed over and over in my pre-market analysis prior to this video, and a mistake that I will make sure I will not be making moving forward, because, you know, what could have been like a 10K profit, 10% profit, whatever it is, ended up being like a $500 profit. So definitely something to take it, to definitely something to examine. But it is what it is, right? Like, there are 100 million opportunities to take on any given week, so it's not really a big deal. But when you take a position, right, active managing, stop active managing my future self. Like, just cut it out, like, and we'll get into that on the 1 hour. No worries. But again, we saw this inverse head and shoulders close with strength above 1756. I was like, awesome. We are bullish into the next sort of level, 1782 and 1805 and everything else. We are now, once again, still in an uptrend, but we're stuck within this range at 1782 and 1805. So I want to be playing retest of these different levels, right? We have two different levels we could retest at. This level here at 1782, between 1782 and 1786, we have the November 22 high, that monthly candle high, as well as 1756, right? So I'll be looking for buys on strength, buys on strength between 1782 and 1756. If we open the market, we come into this level,
we reject it to the downside and we start to move up, I will be looking again for buys at 1782 sort of area. We also have this fib here. Not to, it doesn't add a huge amount of context, but as you guys can see, all right, looking left, we do have these sort of wicks here. We have levels of microstructure and everything else. It does act in confluence with a move into 1756, a retest around that area prior to a move up. Which is why I'm taking both levels into consideration. 1756 is an extremely strong level of structure, as we've seen in the previous week and everything else. So I'll be taking, again, both of those levels into consideration when it comes to wanting to get long. Also, when we look at 1782, that 1780 sort of area, we also have the 382 in confluence with that level of structure. And again, going into the sort of microstructure perspective that I was talking about on the daily and weekly, when you look left, right, we have this very clean level of structure at 1782. We rejected from it prior, and we're now turning it into support with these long wick rejections to the downside. So, of course, that leads me to believe I should be expecting retest of 1782 before moves higher and getting long around those levels. Of course, as always, I'll always play these levels level to level. So if we get a break and retest above 1805, of course, I'll be taking that. If we get a deep retest into 1756, I'll be looking for buys there. 1756 will be the most pivotal level, in my opinion, for me, right? If we break back below 1756, it's time to look for shorts. From my perspective, into 1725 and even more so below 1725. So that's kind of my sentiment overall. I hope that made sense. I try to make it, again, as clear as possible for my future self. Once again, I'll be looking for buys with strength on 1782 all day. If we break above 1805, break retest above 1805 with strength, I'm getting long and buying all day. If we get a very deep retest the previous level of structure we just broke out of at 1756, I will be getting long all day. It is not until we break below 1756 that I'll be looking for shorts or thinking that we're going to start reversing, especially if we see dollar strength on the other side of that. Excuse me, I know I'm speaking fast, but I just want to be all the way clear. And of course, as always, the arrows outline that. We have a couple of different ranges we can play into on lower time frames. And as you guys can see, they are laid out for you guys and for my future self, more importantly, on the screen here. So going into the 1 hour, and as always, when we get into lower time frames, it always becomes much more clear. Look at these, these very clean levels. These levels are so respected, right? And not only, I want to just go back into what I was saying on the 4 hour. Not only do we have the 1805 level of resistance, but we also have the last week candle high there as well, which gives me a ton of conviction to get into buys if we have a break and retest of that level. If we break last week's candle high and retest above that, a retest above that level of structure, that's extremely bullish to me. Into 1825, into all these different levels of structure that we can play thereafter. And as you guys can see, right, this is the NFP candle. Huge dump. I there were a bunch of people in a group I'm involved in. We just chat around and stuff like that that got involved in this trade. Awesome. I was only looking for buys on stuff like this, so I wasn't really entertaining it. But overall, once I saw these rejections to breaking the range low, though, highlighted in this yellow circle, I knew that we were going to remain bullish, at least going into next week. We are going to remain bullish playing above these levels, right? So as I mentioned on the 4 hour, there are a couple different levels that I'll be open to taking buys on. Of course, the first would be that 1780 sort of level, that 1785 sort of area. We also have that level that we broken out of at 1772, and as always, the original level of structure that we broke out of 1756. So as long as I find strength on any of these sort of levels, I'll be looking to take buys. It will not be until we break back into the range at 1756 that I consider even selling, type of thing. So with that in mind, of course, bubble outlines that buys on strength equals, we're going from the range low into the range high sort of deal, and everything else. And also something I want to mention as well. I was talking to another trader a couple of days ago, like just chatting back and forth, and it's one of those things where you really have to, define your plan and stick to your plan. Win or lose, regardless of the outcome, follow your process, follow your plan, because that's what matters. That's what, that's what makes you your money. Staying consistent, staying disciplined in your plan, and what will work. I'm coming to the charts with a very unbiased approach. I'm not in the market. I'm not involved in any sort of position outside of the times where, of course, I have a position I'm holding into next week. This is the best time and most clear time to define where you want to be, what you want to see, where you want to see it, and everything else. So with that in mind, if there's something that's not going on, because I want to highlight the trades from last week, if there's something that you don't like, or something that a price action that you don't want to see exactly how you want to see it, type of thing, just sit on your hands, bro. People are out here losing crazy amounts of money because they just can't be patient. They can't just wait to see what they want to see. So I just want to get that out, little nugget there for my future self and everything else. Just to get back into the overall plan, once again, I'll be looking for buys on different levels as far as 1786, 1772, and 1756. As long as we get retests with strength above those levels, I'll be open to buying. It's not until we break below 1756 that I'll be open to selling or even considering a reversal. Would also be playing this break and retest above the 1800s to get long as well if that opportunity presents itself. Whew. So going into last week, right, there were a couple of really good trades I took on gold last week. The first was this sell. Again, as mentioned in my pre-market plan, I was not going to be trading this range. I was only going to be trading breaks above or below these levels of structure. We had this first break above here. I did not bite because we did not get a clean retest. As you guys can see, we had clear rejections to the upside, but I did get into these sells here. We had a very clean break below this range. That last week candle low there as well. We also got a kind of a micro retest. So I set a sell limit at 1746.60. Excuse me. With that, I wanted to play it into 1735 sort of area. And as with my, I believe I covered the, I was doing one of my videos where I made 6% type of thing on gold. I outlined how in that position I drew a very fickle trend line and everything else. And when I start to see that rounded bottom is when I know I should be exiting the position. I saw that exact same thing here, right? And there was it was one trade, two positions, risking 0.5% each, totaling 1%, because I wanted to get in a little bit early in our market execution, and then I had the sell limit there at 1746.60 as well. So of course the execution was there, and then the limit got triggered thereafter. So I closed one position right here, and then I let the rest of it run, right? I got a little bit greedy on this particular position, and I'll call myself out on it. I drew this fickle trend line, and I saw this engulfing candle right here, and I knew, oh my god, my voice is cracking. Holy shit. Excuse me. And I knew when I saw this engulfing candle that we were going to potentially reverse for a retest, whether it be, the range low we just broke out of or higher than that, and I held it anyways. Just being stubborn type of thing. I held it anyways. I was like, you never know type of thing. I could probably maximize it. I had to have the discussion with myself. Am I comfortable with price retracing to my entry? And at the time, I was ignoring again this fickle trend line, the engulfing candle, and everything else around the bottom. This whole thing. So I only profited half an R, like 0.5% on this, and then had my stopped out at break even on the other trade. So with that in mind, excuse me. So with that in mind, I definitely could have managed this a little bit better. I could have just exited as soon as I seen this rounded bottom. But it is what it is. I'm not super pressed about it. New week, new trades to be taken as well. I think overall the execution was really good. I just think that the management was not all the way there, and I'm starting to see a reoccurring theme with the management, right? Not active managing, but also finding that balance between, seeing these different levels of structure and making sure I'm not getting chopped up or, getting reversed on type of thing on these different range breaks. So now to get into the big one, man. This was definitely a learning experience for me. This is exactly what I wanted to see, right? I was gonna play the breaks of this range above or below. Taking buys above and sells below. Excuse me. And I was waiting for this move above 1756 for a very, very long time. After I got stopped at a break even on my other half of this position, I just let price do its thing. I saw the rejection at 1756. People were trying to sell it, and I was like, I'm not selling this. I'm not playing this range whatsoever. So this first sort of fake out, I didn't bite on it just yet. It was when I saw this candle. Look at how much strength this candle has. You cannot ignore this kind of candle. Long way to the downside. Huge solid body into 1756 and eventually breaking 1756. And I got in on the second candle formation thereafter. When I saw that first engulfing candle though, that's when I knew I should be getting long around this level. So that's exactly what I did. I got in around, let me check my journal. I got in at 1762.31. So right here, right above that level of microstructure during this candle formation right here. I was looking to play that into 1772 and eventually higher than that. And I didn't hold it for as long as I wanted to for one reason. This was like middle of New York session, and this was the last candle for New York right here. This candle to the upside. It was when I saw this sort of small bearish candle forming that I was like, maybe we're gonna see a retest into 1756, or maybe a retrace into my entry like above this sort of level of microstructure before I move higher into 1772. Maybe I could catch that and sort of avoid the mistake I made here by not closing early enough. Big mistake, and that goes into active managing. If you place a trade, let the fucking trade play out. Excuse my language. So with that in mind, I closed it early and just look at where price went. Parabolic, like look, literally 400 pip move I could have captured. Absolutely nuts, and I squandered it because of active management. Because I didn't feel comfortable holding into Asian session. When, again, future me, I hope you're listening loud and fucking clear. You trade New York session, typically New York open like 8:30 into 12 p.m. And you also trade Asian session, like 6:30 into pre-London as late as 12. That's a session that you trade in. Why would you be scared to hold that trade into the next session when it's a session that you trade? So definitely something, again, personally for my future self to take into consideration. But again, that's just my sort of review. That's more sort of take on it. Had I not active managed, had I not worried about the session sort of changeover, I would have captured a very large move, something I'll be taking into consideration moving forward and improving on. But overall, that's my pre-market plan for the week. Once again, I'll be waiting for a range break between 1786 and 1801. I'll play buys either way, a retest of the range low and a break and retest of that range high. And then I'll also be looking for buys at 1772 all the way down to 1756, with breaks below 1756 being bearish reversals to me. So I hope that makes sense. I hope I was clear. I know I was a bit lengthy on this one. But overall, as always, future me, God bless you, bro. I hope you're having a great day, living your best life, living to your utmost potential and everything else. Also, as always, shout out to my 3 subscribers. I hope you guys are also doing your thing. God bless you. And take care.